This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, July 8th, 2015. Euro dollar. So the market's finally extended declines, breaking down below last Monday's 109.55 low to expose next key support in the form of that low that we saw going back to the 27th of May at 108.19 further down. A break below 108.19 would be significant as it would then open the door for fresh downside towards a retest of that low that we saw back in March at 104.62, which is also the 12-year low for this market. At this point, a rally back above last Monday's high, which comes in around 112.80, would be required to take the immediate pressure off the downside. Sterling dollar. So cable has now broken back down below some previous support that had been in place at 155.50, and this break puts the pressure back on the downside and suggests the market could be poised for deeper setbacks back towards that 51.70 low that we saw back on the 1st of June. At this point, a break and close back above 155.50 would be required to put the pressure back on the top side and open the door for a retest of that 2015 high that was set back on the 18th of June at 159.30. Dollar yen. So not much going on with dollar yen in recent trade, with the market still in the process of consolidating and correcting off that high that we saw, that multi-year high that we saw back on the 5th of June at 125.85. At this point, we still can't rule out the possibility for deeper setbacks below the recent low at 121.85, though any setback should continue to be very well supported, with the 120 psychological barrier ultimately seen supporting any additional weakness in favor of a resumption of the highly intense bullish outlook, bullish structure, and for an eventual retest and break of 125.85 further up and towards the 130 level. Euro Swiss. So Euro Swiss continues to be very well supported on dips, and the outlook here is for a recovery in this market back above recent highs that we saw at 105.75, above which will expose the retest of a February peak at 108.15 further up. At this point, only a break back below internal support, which comes in the 103 area, would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar has broken down in recent trade to fresh multi-year lows, and setbacks have extended in Tuesday trade, with the market trading down just around to the 74 area ahead of the latest minor bounce. At this point, deeper setbacks are favored towards psychological barriers at 70 further down, with any rallies now being seen well capped towards the 77 area. Really only back above 78.19 would take the pressure off the downside. Dollar CAD. So dollar CAD continues to race higher, with the market now closing in on a retest of that 2015 high that we saw at 28.35 from the 18th of March. A break above 28.35 would then expose the next major upside extension towards the March 2009 peak at 130.65 further up. Right now, any setback should be very well supported by that previous resistance now turned support in the 125.65 area. Kiwi dollar. So Kiwi has been locked within a very intense downtrend, with the market trading to fresh multi-year lows seemingly on a daily basis, though at this point the market is very overextended, oversold on a daily basis, and could be poised for a bit of a short-term corrective bounce, potentially back towards the 70 area, where a fresh lower top is sought out ahead of weakness down towards what is now the next major measure move downside extension and objective in the 65 area. At this point, only a break back above 72.32 would compromise the immediate downside pressure in Kiwi dollar. SPX 500. So we continue to see signs of the potential formation of a major top in the U.S. equity market, since the market put in a record high back in May at 21.37. But a break below that critical support at 20.40, that March low, will be required to confirm this outlook and accelerate declines. Inability to take out 20.40 will continue to keep the medium-term pressure on the top side, and we should not rule out the possibility for fresh upside back towards that record high at 21.37, while above 20.40. Gold. So some interesting developments in the gold market over the past several sessions. The market had been supported for several weeks and even months above 1170 or on any setbacks towards 1170, though recent price action has seen the market convincingly break below 1170 to put the pressure back on a retest of the 2015 low that comes in at 1143 from the 17th of March. A break below 1143 would then expose an immediate retest of the 2014 multi-year base at 1131 run further down. At this point, we would need to see a break in gold back above recent highs in the 1175 area to take the immediate pressure off the downside.